for a title, yeah. And
Yeah,
the half-truth.
the half-truth. Yeah. So yeah, welcome. One of the things that we're going to try and do here is have a little fun for us and, talk about
more so
the stock market, bond markets, investment markets as a whole, and really kind of pick out some different articles that we see throughout the week and, kind of poke holes at them and have a little bit of fun between the two of us. And
yeah. There's going to be a lot of Jim Cramer bashing on here.
Yeah, exactly. So, but anyways, let's just kind of get into it. This is going to be a lot of off the cuff. We're not going to have any scripts or anything. So, just enjoy. And at the very least, you can laugh at us for being a couple of idiots. So, there's that too. But what an interesting week we've had in the stock market. I think today it closed up at just over 1%, I think, in the NASDAQ. And then the S&P was about 6, almost, 60 or 0.6%. So, kind of interesting stuff right now. We did another recording yesterday where, we talked about market conditions and that kind of stuff. So, Patrick, what are some fun articles that you at least read about today or since Monday that you thought was interesting, good or bad? Huh?
Yeah, the first one, Jim Cramer, baby, says the slide in shares of enterprise cloud provider Workday may be an overreaction. And if we've learned anything from good old Jim Cramer, anytime he says one thing, the opposite happens. So for those out there that like to short stuff, maybe Workday is a short option.
Well, what's interesting too is I know you and I have text messaged back and forth when this came out, but they're to your point, people are so interested in what he has to say and doing the exact opposite that they created an exchange traded fund just for that.
Yep.
So there's a bunch of people that are paying attention to him and doing the exact opposite of what he's saying. So I don't know, maybe we should start doing that.
Well, in his defense, I mean, they had one of those for the ARK fund too. They have an inverse to ARK and betting against Cathie Wood. Which I would take her advice much more than I would Jim Cramer's, but she's got a little bit of the biased itch in there too.
Yeah, speaking of her, just before we jumped on, there was a little clickbait. Speaking of Cathie Wood, it was ARK Invest. Cathie Wood says NVIDIA is really expensive and very obvious. Well, no kidding. If you have half a brain,
yeah.
When you look at their PE, which is a very basic metric, when it's floating at 100 times price to earnings. With something that should be around 20 to 50 at a high.
Well, I mean, that's Tesla was the same issue back in the day. Bitcoin's that issue. It's just there was too much money floating around. And still is too much money floating around. They got they're just propping it up themselves for as far as retail investors and once things move that way, the retail investors call their broker and I want to buy this.
Well, so right here, I just pulled it up. It's got a PE trailing 12-month 104. I mean, like I said, you don't have to be a genius in understanding, companies, stocks, and, market caps and that kind of stuff to realize that having a PE that high is probably not an area where you want to start to become an investor in something. This isn't financial advice, by the way.
Right. Did you see one of the other articles I saw today was Costco sells 1 ounce gold bars and they sell out in hours. So like our conversation we had yesterday and my talk of, I don't know if people are going to want to buy gold. Well, apparently not. Apparently they want to buy it like it's hotcakes.
What, did they have a vending machine like they do their water bottles at Costco full of gold bars?
That would be great. People out there with like $20,000 pumping them into the. There was one website that I saw gold. They're like $50 discount if you buy 1,500 ounces. I did the math. Like you'd have to spend almost $2 million to get $50. Like in what right mind would somebody do that?
Well, there's a lot of people out there that, as you know, and I know that, like that we talked a little bit about yesterday with the baby boomer generation, especially if they've got a decent amount of money, for whatever reason, their idea of preserving their capital is to go out and buy the gold bars. And
Yeah.
and we've talked about this before, on one of our other shows that we do. For those of you that don't know, just go to our website, our YouTube channel, Quiver Financial. Everything's there. But what was I going to say? That we've had this discussion before around gold and people that want to go out and buy these gold bars and stuff. And it's like, well, what are you doing that for? If we have nuclear warfare, if we all have a nuclear winter or an asteroid hits the earth, the last thing people are going to want to worry about is how they're going to pay for things. The only thing that's going to matter is guns and water and bullets. Because if I got a gun, I can go take my neighbor's water and his gold bars, and I don't even need the gold bars.
Right. Well, then not only that, but you have a gold bar and you want to go buy some bread. So you're gonna be there with a knife
Yeah.
and shave off a little piece of that gold bar to go, buy some bread. So yeah, I mean, I do agree the dollar is doomed, but is that gonna happen? Are we going to that? I don't know. I just don't think
Yeah.
we're there anymore.
Yeah, I'm right there with you. I mean, hey, look, if things get to that level, we're all going to be, the concerns of things are going to be way different than worrying about, dollar bills, gold bars. We can't survive more than 3 to 4 days without water.
I knew
So,
Jordans.
oh,
Uh,
I just saw a thing this morning speaking about, interesting articles. So, I didn't even know this was a thing that was going on. Where was it? Let me pull it up here. So it's called monumentalsports.com. So I guess there's a group of investors that are going around and they're like, I haven't fully dove into this yet, but it sounds like they're, creating, funds that will, investors will pool their money together and the fund manager will go out and purchase, shares of a various sports team rather. Excuse me, I almost said sports enterprise, but yeah, like a sports team. So whether it's like hockey, soccer, football, and I didn't even know that they were. I mean, I knew that there was investors into these things, but I didn't know that they had like call it an alternative interval fund or something that would invest in sports teams and things like that. So that was kind of interesting. Have you heard
yeah,
about
that's
that?
gotta be. No, I haven't, but I'd be willing to bet that it's like non-professional or like minor league, women's or like lower grade baseball or nothing because most of those people they're not going to want to sell the good stuff because they make so much
Sure.
money off of it. But yeah, I can see like what Beckham bought a soccer team, or no, he bought Miami. There was somebody else. Somebody bought like some women's soccer team in New York. I think it was Eli Manning, maybe. So it's
Oh,
like things like
yes.
that I can see where they need funding, and which I don't think that's going to be a very profitable type of deal. But shit, who knows? Not
Yeah,
something I would
well,
put my
time
money
will
into.
tell. No, I'm not an investor in that unless I can invest in Travis Kelce because his stock's up right now. Love or hate Taylor
Yes.
Swift. No, I said his stock is up right now just as a person because of all of the Taylor Swift hype and buzz that's going around. I mean, his jerseys. literally since all of this started to come out in the news, his jerseys and various, sports memorabilia regarding Travis Kelce like flew up hundreds of a percent like overnight. Like his jersey became the number one selling jersey like overnight. Like all of these Taylor Swift
Um,
fans don't watch football, didn't know who he was.
oh, really? What did Taylor Swift say that she like loved him or something? Is that what it was?
No, well, there was rumors that they were dating, and then she showed up to the football game this past Sunday, and she was up in the box with his mom, wherever his I guess his box is, or the family box, whatever that is. And she was in there with his mom cheering him on, and that was kind of I think what confirmed people's rumors about whether they were dating or not. And shortly thereafter, and during and after, his jerseys and certain memorabilia or apparel of his is just flying off the shelves.
So
We can't
stupid.
invest in that though.
I'm not a fan of her, but I would love to take a run at her.
Well, I get that too.
In other news,
I guess
the
occasionally on this podcast we'll get a little off the rails. So if we sound like
Brady.
we're misogynist or narcissist, well, good luck. You can always turn off the station and go somewhere else.
Exactly. Business Insider reported today, or did a headline today, the stock market sell-off is orderly, suggesting there's no looming financial crisis. Here's exactly when to buy the dip in stocks. Anybody that tells you an exactly standpoint of when to buy a dip, turn around and run away.
Right. Yeah.
I mean, just us, we're so bearish, and we know that, we feel that the market's going to go down. But even today, I mean, you and I, we were texting with you, me, and Colby, and I was saying, I'm like, wow, what if this situation happens and it causes this? Like, there's too many variables to sit there and say, buy it now, do this now.
Well, and the broad look at this of just like $7 trillion pumped into the system, 7 or 8 trillion pumped into the system during the last 2 years, 2.5 years, is now coming to an end.
Yeah.
There's just no. I mean, I know we have, we're still printing money, but like we talked about yesterday, we're slowing that down. So, the government's got major control over a lot of this stuff, unfortunately. And I think
Well, they
that's a
got the
bigger.
plunge protection team. You know about the plunge protection team, right? Really? I
No.
swear to God, this is a real thing. Like every president puts this together, and they have just like a patch of money that when it's only a limited supply or limited that what they can do. But if the market starts to tank, they can go out and buy, and they have enough volume to be able to move the market to try and slow some of, now granted, if we have a drastic sell off, they can't do anything, but they could maybe, like today could have been some of them buying to help, reduce some of the pressure that of the downside, selection. But yeah, every president has had a plunge protection team, they call it, for the stock market. I think Trump was just sitting there with his guys going like this the whole time during his presidency.
Oh man. Yeah. Well. So I think maybe one fun topic to maybe talk about, because I've been seeing this a lot lately too. It definitely coincides to what we're, just trying to talk about on this podcast going forward, or this, video. Um, is obviously, this pertains to investments. So Patrick, like, what are your thoughts on, these senators and Congress people being able to, trade stocks and individual names, and basically getting insider information, in air quotes, uh, to grow their portfolio. And I mean, how is it that, somebody like, Nancy Pelosi or Chuck Schumer, any of these people can, get paid, a few $100,000 a year, which is a respectable income. And then, 40 years later, after, quote unquote, serving the people, be worth hundreds of millions of dollars. And I think there's a ton of there isn't enough articles, I should say, talking about how these, senators and Congress people can, have access to these things. And I don't know. I figure we can maybe, bash on
Well,
that for a
it's
minute.
funny that you bring that up because just on Twitter, I saw AOC post, at Elon Musk, I was broke and I made my millions after getting to Congress and all that type of stuff. And I'm just like, why would she post that? Like, who in their right mind would say that? Because that's exactly what you're talking about. I'm making millions of dollars in Congress. And then I got into a little bit more, and it was a parody account. It wasn't actually her account, but that is what is so dangerous about the internet and Twitter and all the stuff that gets posted, because it's that type of thing that just catches you and you're just like, how the
Yeah,
so
no, I got caught in the same thing. I literally, before we jumped on here, I was reading that and I went down and it was like, oh, it's so, like, one, to your point, the guy's comment was like, it's funny how this is a parody account. And I was like, what? Oh, I guess I better go double. But I went
then once you go
real,
to the name, you could see that the name was not
yeah.
her account
And
type of thing.
I went to her real Twitter feed, and she, if I'm not mistaken, I'll have to go back and double check. But if there was something in there saying, what she's done, and that she's made a decent amount of money, at least more than what would be considered what she's getting paid. I mean, if she has made millions, it's still questionable. I mean, it's like, uh, I thought this whole thing was meant for you guys to serve the people, make a decent living, and then get out of there, not be there anchored for 40 years.
Well, and I think, I mean, your question of, obviously, it's bullshit that they get the inside. Everything that Pelosi is doing is bullshit. What I think is kind of more interesting, that to give you an idea of, because it's not a conspiracy of how they make their millions. Part of it is lobbyists that they get their money from. But I also learned that, yeah, their salary of a congresswoman, let's say, is $200,000, whatever it may be. If they're a congressperson for 5 years, they get a full pension, and so they get their pension. If they were to quit after that, they get a full pension for that job. On top of that, for every committee that they're in, they get a salary too. So you have some of these senators, congressmen that are on like 5 different committees, getting a salary from each of those committees. And then if they're on that committee for 5 years, and go ahead, people fact check me on this because I've done a little bit of research, so I'm pretty sure this is true. They get a pension from each one of those. So, I mean, without even any lobbyists, they're able to game the system and just be on all these different committees doing these stupid jobs that really are not helping anybody but themselves. And they're making all this, their $200,000 salary is really like $1 million a year because of all these stupid committees.
Right. Yeah, I didn't know about the pensions on the second half of it. The first part, I knew that they would get one, but to only serve 5 years and have a full
You
pension
get a
to me is
full
very
pension.
ridiculous. And we wonder where our tax dollars go. Because if that's,
Exactly.
how many senators are there? How many Congress people? I know that there's
How
a
many
ton of
committees
senators.
are there?
Yeah,
Yeah.
exactly.
And the
Um,
and the committees are huge. They got 10, 15 people on a freaking committee. And then they go and, do these conferences of, oh, Facebook is got to come and testify for whatever bullshit thing that they're trying to go after them for that.
um, one other area I think too that will kind of switch gears, still investment related, is alternatives. And I know we talked a little bit about this yesterday, and we do believe that, for those of that are listening, alternatives can be a good space to diversify your portfolio. But just like with anything, doing lots of research and your homework on those is very important. But what I want to get to with that is, Patrick and I have run into this, and we're very curious as to why this continues to happen. Is we have a lot of these alternatives investments that are offered through broker dealers, and for those of you that don't know what a broker dealer is, I would suggest to go to Investopedia. I don't need to explain it here, but these broker dealers have these alternative investments, and predominantly most of them are investing in real estate. So whether it's multifamily, so think of apartments, or if it's commercial, your commercial buildings, that kind of stuff. But what we found is that they offer such, what they say, great returns on the surface, and they tell you you're locked up for 5 to 7 years, and you're going to make this great return at the end, and you're going to get paid while you're waiting. But then we get to year 7, year 8, they haven't done much. They're on to fund 7 or 8, and keep in mind that during this, these fund managers are collecting a management fee. So that 1 or 2% management fee on a $50 million fund is a nice paycheck for the fund manager and his team, or their team. So that was kind of the thing I wanted to talk about. You think it's worth diving into, and if not, we can move on.
Well, it's I mean, both of us came from the broker dealer space, so we've been with that, and part of the issue that we had and found for clients is the upfront fee to get in is pretty drastic, and a lot of that, or half of that roughly, goes to the rep to sell it, and the rep is going to say, well, it's my, you're in it for 5, 6, 8 years, and it's the only time I get paid until that investment goes full cycle. So I'm your customer service. So it's like me getting 1% a year. So it's it's comparable. The problem is, yes, all that works out, math works out for that. The problem is that initial hit and ability to overcome, because it's less dollars that they can put into the ground to make it work, is what drags these out. And I feel like it's some of them shift, like you said, they're collecting that asset management fee to where maybe they mismanaged or they did something wrong, and now they're going to drag it out because they can't make it up. They have to make it up over time. They gotta stretch it so that they can see an appreciation and value to be able to say, hey, we haven't lost your money, or we're able to get back your principal, and maybe the return wasn't so great. But that's why it worries me about these crowdfunding ones. The crowdfunding, if you can go on to a platform and give them $100 to invest in an investment, whether it be real estate or a private equity deal, or a small venture capital fund or whatever, that scares me, because it's it costs them so much to do that. It's so much work to navigate all that and keep records of all that. You're never getting your money back. Like I cannot see those ever working out, and people fall to it for them all the time because they're able to post, get your 22% IRR, and all this crap. So it's they suck people in really easily, and that's what scares me about this industry the most.
Yeah, and a lot of them, unfortunately, were commercial real estate, and think of buildings, your local grocery store, but more the buildings where you had tenants that are big businesses and stuff have really been hit as also.
Well, I remember their single family one sponsored by Amazon, Bezos or whatever what it was called, but I haven't heard about that one for a while. Like, they haven't been advertising for that or do it, because residential, there's nothing to sell, nothing to buy, so that's kind of hit the wall. But the prices that they were buying at was at the peak of the market. I can't imagine them ever making a money from that at all.
Yeah, it's going to be interesting, to see where those kinds of things end up. But yeah, it's like we said, do some homework. There is room for it in a portfolio. Again, diversification, but be careful, because you can get hurt out there as well as you can in the stock market. But well, I mean, what other things should we cover here while we're...
The last article that I have is from Business Insider, and it was, the stock market is showing cracks. No shit. And even the Magnificent Seven aren't safe from a recession, Morgan Stanley's stock chief warns. Well, considering they're going to be the leading ones down the market, and driving us to the recession, I would say yes, definitely they are not, resilient to a stock market crash. And we maybe said it in other videos that the leaders that we had, these 7 you watch after this recession, they're not going to be the leaders that pull us out of the recession on the back end. Maybe one, but do you remember IBM? Do you remember AOL? Like, they're all gone. They're nothing companies.
Yeah, I tend to agree. I mean, if we look back from, what was it, the early 90s to the 2000s, and then from the 2000s to 2008, everybody was very bullish on anything tech or anything with a .com, hence the .com boom. But after that crash, it wasn't that led us into the next recession. It was real estate and mortgages and those types of assets. And then, from 2008, call it 2010 to, all the way to COVID, if you will, it's been, this whole ramp up of another tech cycle. So, it just goes to show you that, over those time frames, you can see that the people that were leading during those times are not the people that were leading, after, quote unquote, the bubble burst. I think one thing that we could talk about too is, I think what also props those up too, and maybe people don't think about this, is, 401k assets, right? So depending on when you get paid, if you get paid on Friday, if you get paid, or, 4 times a month, or biweekly, or once a month, when you contribute to your 401k, are you contributing into certain mutual funds? And every month or every week, all of a sudden there's this big influx. And what are those mutual funds, buying? Well, they're probably buying, the vast majority of them are the Magnificent Seven. And so, I think we could have we definitely will see a downturn, but I think that helps prop those up. And would you agree or disagree in trying to, keeping those things, somewhat level, and why people are still riding them? And it's really strange, but
100%. And mutual funds are, so many of them go bankrupt or go under, and they just roll them into a different mutual fund or whatever. But yeah, when you look at it, all the time when we get a new client comes in, or we do an assessment, and they have 20 different mutual funds, and you pull up those 20 different mutual funds, and all of them, they all have the 7 in them. So it's like, are you really spread out? They're all going to go the same way. Why are you in 20 different mutual funds if they all have the same stocks in all of them? Just maybe a different percentage or mix or that type of thing, or but they're heavily weighted in those 7. And it is why we've had such a run up, and why they're 50% of the market cap or some shit like that. The top 7 or top 10 stocks are 50% of the market cap. So
that's unreal.
It's going to be an interesting time. It is.
Uh-huh.
It's fucked up, is what it is.
But anyways, thank you guys. Always subscribe to our channel, quiverfinancial.com. We have tons of content when it comes to investable markets, what's going on now, where we think we could, where things could be going over the next 6 to 12, 18 months. If you do have any questions, reach out to us, 949-492-6900. Again, quiverfinancial.com. I'm Justin Singletary, Patrick Morehead. And until we do this again, we'll see you guys